We want to protect the government bond market and make sure the government can continue to borrow at below the economic growth that they're creating. And so I think right now we're in this cycle where people are realizing this, and you have the professional investor class are also realizing it because they've had the worst bond performance, at least in the United States, since the War of 1812. Over the last 3 years, U.S. Treasuries, 30-year Treasury is down 50% on a real basis. That is the worst return since 1812. Now, you wouldn't know that by listening to the financial press, but bond investors are getting absolutely eviscerated. And as they come to the realization that this is not good, maybe we should own something else, that's sort of this secular rise and sort of Bitcoin.
According to historical cycle trends, a crypto market analyst predicts that Bitcoin is on the verge of a potential breakout in the coming days. In a recent analysis, they highlight that Bitcoin has consistently moved beyond its reaccumulation phase, 154 to 161 days after halving during previous market cycles. With this cycle's BTC halving occurring on April 20th, 157 days ago, the breakout window is now open. Historical evidence supports this projection, with Bitcoin breaking out 154 days after 2016 and 161 days after the 2020 halving. This timely prediction echoes the sentiments of other industry experts. For instance, BitMEX's co-founder Arthur Hayes recently shared similar optimism in an interview with Tom Bilyeu. Hayes outlined his projections for the impending bond market crisis and its potential to propel Bitcoin's value to historic heights and strategic diversification into primary energy sources. He cited the fiat system's volatility and Bitcoin's role as a put option on bonds. Arthur Hayes went further to establish that this market is different from the preceding one. He noted that major countries will emphasize avoiding government bankruptcy over effective monetary policy, resulting in unrestrained money creation. The United States has experienced its worst bond performance since the War of 1812, and investors may now explore other investments, such as Bitcoin. Watch clips from the interview to gain further insights into Arthur Hayes' discussion with Tom Bilyeu. Please like, subscribe to our channel, and turn on post notifications for more exclusive content. Enjoy the video.
I think this cycle is a cycle where we break the sovereign debt markets, where every single major country finally admits that we will do anything it takes to make sure that the government does not go bankrupt. And so we're going to remove all this pretense about caring about sound money, and we're just going to start printing money like it's going out of style. And so I think this cycle is going to be a bit different than the last cycle, where the Fed and then every other central bank said, oh, we've overdone it. Let's try to reduce it. They tried, but the governments are still printing money because they need to get reelected. And we're in an inflationary environment. You know, there's too many old people. Everyone's going to go to war at some point. So everyone's beefing up on defense. And so the central banks have come back in and said, okay, we got to print money, but we can't really call it quantitative easing or the things that we called it before. So we'll make up new names for it. But it's the same thing. And so we want to protect the government bond market and make sure the government can continue to borrow at below the economic growth that they're creating. And so I think right now we're in this cycle where people are realizing this, and you have the professional investor class are also realizing it because they've had the worst bond performance, at least in the United States, since the War of 1812. Over the last 3 years, U.S. Treasuries, 30-year Treasury is down 50% on a real basis. That is the worst return since 1812. Now, you wouldn't know that by listening to the financial press, but bond investors are getting absolutely eviscerated. And as they come to the realization that this is not good, maybe we should own something else, that's sort of this secular rise and sort of Bitcoin. So I don't think it's going to be a similar type of credit event that's going to cause prick the bubble and crypto and everything else that happened in 2021. But there's going to be some change in that mindset. The Fed, the Treasury, and their other global central banks and fiscal governments, if they continue to do what they're doing, but say that on the one hand, we want to try to fight inflation by not printing money, we're going to get another situation like we got in the third quarter of last year, where the bond market says, hold on a second, what do you want to do? Do you want to safeguard the value of fiat currency, or do you want to make sure that the government is funded? And I don't know when that situation is going to happen. There's lots of tricks that they can pull, probably a little bit too mundane for this particular venue. if you really want to get into US money markets. But there's going to be another situation like that. And you could see a general, risk off, meaning financial assets decline on that situation, on the fear that maybe this time they're not going to save the banks and print the money and, reflate the system. I don't think that's going to happen. I think they'll do the same thing they've done every single other time. But you could get a situation like that. But if I have to really think about what could stop this particular bull market, it's going to be something about the belief of institutions buying Bitcoin. So what's the narrative right now? You never sell because the institutions like BlackRock and Fidelity, they have to buy all this Bitcoin because there's all this pent up demand from institutions who want to incorporate Bitcoin into their portfolios. And there's all these diamond hands out there who aren't going to sell their Bitcoin. So there's a very low supply of Bitcoin left to sell, which means the price goes asymptotic on the upside. Now, obviously, that can be true for a while, but it won't be true forever. And so at the point in time where we start to see a massive leveling off of the allocations of money into these products, then that narrative starts to shift. And people can become less confident that there will be, a few $100 million of buying of Bitcoin every day from all these major ETF fund managers. And I think that might be the thing that I'll be looking for, which says, okay, whatever the price of Bitcoin is at that point, maybe it's time that I think about, at least for the other non-Bitcoin and Ethereum assets, getting out of all of those.
Arthur Hayes is exploring opportunities to diversify Bitcoin holdings into fundamental energy assets, particularly given the appealing price points. Due to growing skepticism toward the traditional monetary system, there is a strong reluctance to exchange Bitcoin or Ethereum for conventional currencies. He also believes the impending bond market crisis will create unlimited money, driving up Bitcoin's value. Traditional portfolios will exit bonds, resulting in a big fiat inflow into cryptocurrency. This merger will cause skyrocketing price increases. Arthur Hayes cautions against taking profits, as the bull market has just begun. He contends that people underestimate the potential of this rise, fueled by the bond market's collapse and Bitcoin's simplicity of use as a put option on bonds. A worldwide conflict or disaster will ultimately arrive, but Hayes remains focused on the present opportunity, hesitant to miss out on potential gains. Let's go back to the interview and watch more clips to gain insights from Arthur Hayes.
And then on a more philosophical level, I have to think about, well, if Bitcoin has risen to such a high level relative to the energy that it represents, maybe I should own a power plant or a massive stake in ExxonMobil or something where I actually own the fundamental energy source and I got it at a very cheap price relative to the price of Bitcoin. And that's a way that I can take some chips off the table in Bitcoin terms. But what I probably won't be doing is selling Bitcoin or Ethereum for fiat, because I still think that the fiat system is, I don't want to participate in that. But primary energy, if I can own those resources at a very attractive price because Bitcoin and Ethereum and these other assets have been bid up to such an insane level, then that's probably something I should be doing. When this really bad thing happens in the bond market, then we get to the final stage of essentially the sovereign bond bubble, which is, okay, let's stop fucking around. We will print money in whatever quantity is needed to keep the 10-year bond rate at X, whatever that is, right? They'll go full Japan. That's the end game. Then we get Bitcoin, 1 million, 10 million, or whatever. And then it's, okay, at some point we get off the train and like, okay, well, Bitcoin's great. It's gone to this insane value because they printed all this money. Is there a real asset, real energy producing asset that we should own that is more essential than Bitcoin? And I've gotten it at a great price because of how high Bitcoin has been bid to. Again, it's more of a theoretical, philosophical thing of, is there something else to buy when you want to sell Bitcoin that's not fiat? I think we're at the point where the largest government bond market admits that we can't afford this, so we're just going to print the money anyways. And that's the option that you're really trading on Bitcoin. You want to be around for that, because that's going to be, and if it happens this cycle, it's going to be absolutely insane. And so that's when I'm writing an essay right now, and the tenet of the essay is people don't have enough imagination about how ridiculous this bull market can get. So if we combine the Bitcoin is now available from a financial perspective to be ingested into TradFi portfolios, And you have TradFi portfolios do not want to own bonds because everybody knows that this is what's going to happen in the treasury market and, JGB market, ECB's bonds, China bonds, all the different bond markets. If these confluence of factors, this is the situation where the 40% of managed money that's in fixed income or basically sovereign bonds globally, a portion of that goes into crypto. And so you have a massive amount of fiat that can only go through a very, very small door. You just get insane price appreciation across the whole space. I don't think people appreciate that right now. They're like, oh, is Bitcoin at 70,000? Maybe I should take some out the table. No, I shouldn't. This is a time, if this is the narrative that you were operating under when Bitcoin was 16,000, we haven't even gotten to that point yet. We've just started. This is just like the amuse-bouche. It's not even an entree yet. So we're just getting started in this thesis of the collapse in terms of we have this one asset that's real. We have this whole Fugazi financial system. For the first time in history, we have an ability to express a put option on these bonds in an easy digital fashion versus, going out and holding a vault of gold, which is quite difficult. So that is the insane bull market thesis that I've been operating under. We're marching towards that. I don't want to be underallocated if I'm right. If I'm wrong, we get, maybe Bitcoin goes to 100,000, 200,000, whatever it is. And okay, cool. Made a good chunk of money. We'll prepare for the next cycle because it's coming. If it's not in the 2025, 2027 timeframe, it'll be when there's the global world war of the, end of the decade or a little bit after, as we've come to this situation where every government's printing money because they're going to war with each other.
Hayes has predicted a change in mindset toward Bitcoin, fueled by central banks' paradoxical strategies of combating inflation while printing money, which might spark another bond market crisis. Institutional opinion will be critical, with declining trust perhaps indicating a revaluation of non-Bitcoin and Ethereum assets. Rekt Capital's analysis shows that this possible tipping moment is approaching quickly. Rekt Capital believes that, while history is not always repeatable, present cycle tendencies point to a breakout within days. Despite September's traditionally gloomy trend, Bitcoin has climbed 9% this month, the biggest average return for September in this cycle, surpassing the 6% increase witnessed in 2016. Bitcoin has historically had good returns in October, with 9 of the previous 11 months showing upward growth. Bull market months, such as October 2017 and October 2021, had 48% and 40% gains, respectively. Bitcoin's current 6-month flat trade would take a 14.6% increase to break its previous high of $73,738 and start a new price discovery zone. Investors and market followers are paying close attention to the current price movement and the coming breakthrough window. With Bitcoin only 14.6% away from its previous highest point, market participants are keeping a careful eye on any fluctuations in mood. Bitcoin market cycles and seasonal trends are complex and impacted by various factors. Historical patterns and seasonal trends indicate likely future swings in Bitcoin's value. As we conclude, what is your investment strategy amidst these predictions? Are you diversifying into non-Bitcoin assets or holding steady? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.